Okay, so the numbers say that based on the 4% rule, you can retire. But then how does it really work? How do you withdraw funds so you can support your lifestyle and never run out of money? Now, if these questions keep plaguing you and are causes for concern, watch this video as I go into the details of how I plan to leverage my assets to meet my expenses in early retirement. I'm Vinny, and I reached financial independence at 45 and retired from my career in technology so I could play competitive sports, travel the world, spend more time with my family, and gain new experiences. Now, there are many people who I know who will cringe at the idea of selling their investments to fund their expenses. Now, we've been so used to saving and accumulating that the very thought of selling those assets and reducing those assets brings so many negative thoughts. Like, I have friends who will only feel confident if the passive income generated by their investments completely meets the needs of their lifestyle. Now, it's easy to do that with a portfolio that comprises only of fixed income, but the challenge you will run into is your expenses are not going to stay the same because of inflation. Now, these assets will not grow much, and so you may not beat inflation down the road and you could be in trouble. Now, the other way you could deal with that kind of fear is invest in only equities and live off the dividends. Now, say you were investing in VTI, a total stock market fund. It yields about a 1.25% dividend. And if you want to live off that cash flow and your, say, expenses were $100,000 a year, you would need $8 million in assets to generate $100,000 of expenses. So basically, you will be retiring a lot later than you have to. Now, I understand both these examples I gave are on the extreme sides of the spectrum. So it is really a question of optimizing. Now, we want confidence that we can safely retire, but also not wait too long to regret the wasted years of working too long. Now, I think if we can increase our confidence, then we save ourselves years. Now, one way to build this confidence is to understand the math and why it can work. And secondly, by listening to others on the path and validate our hypothesis. So I'll go over my asset allocation, how I plan to use the assets for living expenses in a way that reduces that sinking feeling when you have to withdraw from your portfolio. And all this without compromising my lifestyle, of course. Now, if you haven't seen my previous video on my desired asset allocation and how I got there, I suggest watching that. Now, I say desired because I do need to make a couple of adjustments in 2025 to get there. I'm close, but not completely there yet. So here is the asset allocation. It's probably easier to group these into like three categories just to get a big picture of the allocation. The way I see it, I have 62% in equities, 33% in fixed income, and about 5% in more speculative, high risk, high growth investments. Now, this is very much in line with the 60 to 70% equities recommended by various portfolios that the 4% rule applies to. So the first part of my withdrawal strategy is to use the fixed income and cash flows from the investments. We could use this exercise with any portfolio, but it's helpful to have some numbers to visualize. So for illustration purposes, I'm going to use 5 million as the total value of this portfolio and see how the numbers work. So this portfolio generates about $148,000 in cash flows annually. Now, how much variability is there in these cash flows? I think it's fairly stable because the money market yields are inversely related to the real estate syndication cash flows. while the notes and dividends from equities are pretty stable and they're conservative. So if you're planning to use the 4% rule, if your portfolio was $5 million and expenses were about 200K, it only requires a 1% withdrawal from your portfolio, that is selling your assets and making up for the gap in your expenses. Now, this obviously works for different numbers. Like say, if your portfolio was 2.5 million and your expenses were $100,000 a year. Same, 4% rule, you have about $75,000 in cash flows, and 1% of 2.5 million, 25,000, that's to meet your gap of 100,000. So basically, this portfolio generates 3% in cash flows. Now, withdrawing 1% for the remaining expenses just feels a lot better than selling 4% of your assets to meet your expenses. Now, in one of my previous videos, I had mentioned that my personal withdrawal rate would be 3%, which obviously means that I wouldn't have to withdraw from my portfolio apart from the distributions. However, that will only work for year one, because from then on, I have to account for inflation. Now, obviously, if the market is doing okay, then withdrawing a fraction of the gain to make up for inflation adjustments, I'd be okay with that. But what about worst case scenarios? You might have all heard about sequence of returns risk. So what if we have a decade of bad years in the market and the S&P 500 doesn't even hit the previous peak again for 10 years? In that case, I would probably fill the gap from inflation increases by either cutting down on discretionary expenses or by taking up some side gig, or maybe just a combination of both. Now, similar logic should apply even if you were following the 4% rule, since you'll be only selling 1% of equities each year, in bad stock years even. Now, if you're getting uncomfortable, you could use the combination of levers that I mentioned above. Now, since a big part of this exercise is building confidence, there are a couple additional steps you can take to build additional confidence in your ability to pull these levers. For instance, one of the levers is the ability to cut down expenses a bit. So when going through your expenses, when you determine like how much I spend in a year, one thing you could do is categorize them into discretionary and necessary. Now, I realized when doing this that 40% of my expenses, or more than that, were discretionary. So it really shouldn't be a big deal cutting back on some of that if necessary. For instance, like I have $50,000 in travel expenses every year. Can I still make do with 40 or even 30? Absolutely. You just change your destinations to some lower cost destinations, because I really want to see the world. So it's pretty, I think it's not difficult to imagine that I could reduce that without really making a whole lot of changes. Now, on the other hand, in retirement, you could also do some side gigs to make some income if needed. Now, I wanted to see if it was really as easy as it's made out to be, when you watch all these YouTube channels. So in 2024, I actually tried it. I tried becoming an Uber driver. So I did this when I was bored, and it turned out that it is really as easy as it's made out to be. I was making about $25 an hour in Texas. Had some amazing conversations, but I could get into that experience a little later. But just driving about 4 hours a day on a weekday, at your own time when there's no rush hour, you could be making an additional $2,000 a month. Now, although I don't do that anymore, I don't drive the Uber, I have confidence now that it is an option available if needed. It's all about building that confidence. Now, It's perfectly natural to be worried and concerned, and it doesn't matter what your withdrawal rate is. The concerns are always going to be there. The fear is going to be in the back of your mind, and maybe you can never overcome all the fear, but you can certainly mitigate it and give yourself more confidence by getting into the details, do the math, consider various what if scenarios, and see if you can still make it work. A combination of your safe withdrawal rate and building confidence through pressure testing various scenarios is the key to helping you take that next step. Now, we can never perfectly predict the future, but it doesn't hurt to be prepared for whatever that may be. So, what's your retirement strategy? What will give you more confidence in your strategy? Please share in your comments and let me know what else you would like to hear about. If you like these videos, please like, subscribe, and share. Until next time, develop your strategies for what if scenarios and savor the journey.